Hi, my name is Zsolt Kőhalmi. I'm Global Head of Real Estate as well as Co-CEO of Pictet Advisors. So how does this all affect real estate? First, interest rates. We are in a globally low interest rate environment now, where real estate is one of the very few current income producing alternatives available to people. This in turn takes us to our second point, capital. Flow of capital will continue into real estate given its relative attractiveness versus other asset classes. However, interestingly, the third point is on credit. And on credit, banks are becoming more risk averse, and it will become increasingly hard, in our view, to find the right credit for real estate transactions. Fourth point is inflation. Inflation, in our view, will remain low in the foreseeable future, given that both oil and employment wages will be low in the foreseeable future. If at some point it starts to grow, then real estate will be one of the better natural hedges, given that most rents are actually indexed to inflation. So maybe let's dig a little bit deeper into real estate, and I'll go from worst to best. Retail is in a structural downturn, and we believe that retail real estate will continue to suffer in the years to come. We have hospitality. Hotels obviously have been closed for 3 months. In previous downturns, this has normally taken 3 to 4 years for the average daily rate to come back to the same level as pre-recession. And this recession could be similar to that as well. The offices are slightly more nuanced. On the one hand, we see a real trend for people working from home. Counter to that average office space per person used to be 26 square meters. That has reduced greatly to 11 square meters recently. I think that will start to grow again. And companies will create larger office space per employee as a way to attract the best talent. And next would be residential. A lot has been made, again, of an accelerated underlying trend whereby we see more move to the suburbs in order to get free space. We will see flats being advertised with 2-bedroom and 2 workstation flats. And so the winners of this pandemic have really been logistics, in particular last mile logistics, given the onslaught of demand from online ordering. We have never consumed this much data. It has exploded, and this will create additional need for data centers. I really like the saying that says, never let a good recession go to waste. Today, 80% of the population lives in cities, and these cities will determine our future. The wide boulevards of Paris, the wide streets within New York, as well as actually even Central Park, were all created through pandemics. It is our opportunity to create better cities throughout this recession. We will see undoubtedly a quite bumpy and very accelerated change in the underlying economy in the coming years. This means that the buildings we will use and the way we will use these buildings will change markedly. And so for us as real estate investors, we feel it's key to be on the right side of history and create the buildings that actually meet the demands of this very fast changing environment.